traders. What we saw obviously yesterday, risk sentiment soured a bit, and those US 10-year yields slipped back below that 3% key psychological threshold. The opposite's happened this morning, and that's helping the dollar. Risk sentiment souring, and the US 10-year yield back about 3%, helping to widen that yield differential advantage. The 2's10 curve flattened yesterday quite substantially. This morning it's starting to re-steepen slightly. Boris Johnson survived the no confidence vote. However, Tobias Elwood is pushing the 1922 committee to change those rules to not allow him to basically withstand 1 year's time period before the next confidence vote can be held. We also heard on the Brexit front that either today or tomorrow the UK government's going to introduce some legislation which would allow future ministers to disapply and override unilaterally parts of the Northern Ireland Protocol. So we'll have to see, with Boris Johnson being slightly weaker now, whether that will stymie pushing through legislation through Parliament. US dollar JPY, that's the one that everybody's looking at the moment. It's in the spotlight. It hit a 20-year low back to 2002 levels. 135, it's knocking on the 135 door, and it's the cleanest instrument, in my opinion, to play this monetary policy divergence theme. 135, is that next? It's knocking on the door, but could that be the turning point? Could we see some buyers step in then? Oil is knocking on $125 barrels door. We had the Trafigura CEO yesterday saying that his target's 150, and a whole load of other investment houses were jumping on the bullish bandwagon. We had some private industry data out last night which actually showed a build when the consensus was expecting a drawdown. The day ahead, we've obviously got some Euro final GDP Q1 figures out, and then we've got a US 10-year bond auction this evening. Asian indices closed in the green, however that hasn't flowed through to European indices. Sea of red, and US equity futures also showing a more tepid open.